What's good, everybody? My name is Michael Bass, and today's training will be on over London patterns and the power of three. You may be asking what the power of three is. The power of three is consolidation, manipulation, and distribution. Market does this almost on a day-to-day basis. So if you can identify these moves and these patterns in the market, you will start becoming a very, very elite trader, and you'll be finding very great setups on a day-to-day basis and trusting your trades and having overall take profits and stop losses. So let's get into it. London patterns, what you see over here on the left side of the screen is something that we call London patterns. You'll hear these references often: pattern 1 short, pattern 2 short, pattern 3 short, 3 long, 2 long, pat 1 long. You'll hear these often. Now, you should know that short means that we're looking to sell and long means we're looking to buy. So the three patterns that you see on the left side are short or sell patterns, and the three that you see on the right side are buy patterns. Now we're looking for these setups and the way that we're looking for these patterns on the 15 and 5-minute time frame. Okay, once you can identify these on the 15-minute time frame, then you'll have very, very strong trades and trades that you'll trust. Okay, so let's just get into it. So let's do let's just talk about the patterns real quick. Okay, so we all know that this blue box right here, as you can see, correlated with the wick or chart is our Asian session, right? The white boxes on our chart are the same blue boxes that you see on this graph over here. Okay, it's the same thing that you see on this graph over here. So these are the patterns that we're looking for sales in the Asian session, coming out of the Asian session. And these are the patterns that we're looking for buys coming out the Asian session. Why will we be looking for the market to clear above the high for shorts? Why would we be looking for the market to rise first before looking to sell? Because we want to see the stop hunts. We want to see that the market creates that high and it's respected and that we can drop down. So that's what we're looking for with short patterns, okay? So now with the longs, it's just the opposite. We're looking for it to drop, come back, clear out lows, clear out the manipulation, and rise back to the upside. So let's go ahead and do some examples on the chart, okay? Once you study these patterns and you do it over and over and over and over and over and over again, like I said, it will just become ingrained in your head that you're going to see it automatically on the chart before I even start saying things and going over the examples, okay? So when we're looking at these charts, right? When we're looking at the chart, we're looking at the system, we're looking at our market maker. We call this the market maker system, right? Let's just start looking at examples. You can almost do it every single day, right? The market just goes back and forth, back and forth. So we see Asian session. The Asian session, this is now we're getting into the power of three, right? Combining the power of three in our London patterns. The Asian session is consolidation. This is phase one. That's the consolidation. That's phase one of the day, every single day after 5 o'clock Eastern. That's phase one. No takers or money makers. Don't forget. After 12 o'clock, after the Asian session, we start to get into phase two, the manipulation. We start to see the market manipulate. So what do we see happen here? Between 12 and 3 o'clock, what do we get? Phase two, that's manipulation. Manipulation is they want to manipulate the average trader, the day trader, to get in their trades early so that, and eventually, like we said, manipulation is going to come back, take them out the trade, and then it's going to go the way that they want. This is why it's important not to be trading all day, because it's a great chance during London or New York session, if you got in a trade, that trade is going to get taken out during London Open or New York Open, and you had a better chance at finding a better entry during one of our kill zone times inside of our London kill zone or our New York kill zone. If you would have took a trade anywhere during this time, if you took a sell up here and you were in profit, if you took a sell up here and you were in profit, London Open took you out. And then you have to get back in the trade. And, like I said, now you're doing a lot, because if you're not a very, very great trader, elite trader and whatnot, it's going to be hard to get back in these trades after getting stopped out. And you're not going to want to be looking at the charts all day anyways. You're not going to want to be looking at the charts, watching it drop and then watching it rise. Like, that's doing too much. That's not what we do. The easier trade is what? Taking the buy entry during London session. Why? Because it came and it touched these lows and then it started buying up, right? We don't want to ever take trades during the Asian session. Just very simple, okay? Very simple. So if we're looking at this and we're looking to look at our patterns, what do we see? What do we start to what do you start to notice? What did the market do? Not very strong, but that's an example of a pattern too long, right? That's an example of a pattern too. But what do we see happen now? This is why it's important to have your entries and your exits in the market. If you're looking to take a trade from here, from this low, where's your take profit going to be? From a session low. You cleared a session low. You should know this from the identifying highs and lows video. Your take profit is going to be at a session high. Okay. So now what do we see happen? Then we see a retracement going into New York session. And it's the same thing, the same London patterns. You can think of it as a New York pattern as well. These are our market maker patterns that we look for on a day-to-day basis in the market. Okay, these are our market maker patterns. So it's for London and New York session. It's the same thing. Going in the New York session, what do you see? We see that the market drops down, clears out that low, and then we get the manipulation, the distribution to the upside. So what do we have now? Now we cleared out a daily low, and now we rose all the way to the daily high. You see how when we just cleared the session low, it went back to a session high and then dropped back down. But now we cleared the daily low and we came and cleared out a daily high. The difference in pips are, they're substantial. This is a 25 pip move, which isn't bad, versus a 50 pip move, right? So both great trades, really good moves. Just have to be on top of it. So that's looking at our power of three. Now you go into the next day. What do you see happen on the opposite side? What do you see happen the opposite way now? You start bringing up your patterns and you're going into your session, and you even notice you get a very subtle pattern one long going into London session, right? And then what do we see though? Now we clear this high. Where does the market go? Clears the high, clears lows, goes and clears high. And now what is this trigger for you to start looking for? Pattern one short, right? Because we stop hunt at highs. That's what you want. That's the point of the Asian session. We want to get a stop hunt. We cleared out a session low, cleared out a session high, cleared out a daily low. And now what do we see? Then we get a strong move to the downside. And it's repetitive. It's over and over and over again, over. We see the next day, what do we get? Asian session, that's consolidation, phase one. We get manipulation to the upside. It clears out these highs. It's at these highs. It drops to the downside. And now we see going to New York session, we clear out the lows right at New York open, time and price, and we take off straight to the upside. And you're done for the day. And it's just repetitive patterns over and over and over again in the market that you'll start to find and you'll start to fall in love with. And you'll find your favorite patterns. And this is for all your pairs. We looked at Euro USD right there. Same thing with GBP USD. We can look at it. I have these patterns up all the time when I'm looking to trade. You combine this with your RSI, you combine these with divergences in the market, and you become a very, very, confident trader. You become a very confident trader. And that's what we want to be in the market, confident traders. Okay. So I hope that this is starting to make sense for you, and everything is clicking as you go through these videos, and you just start seeing it over and over again, and you're seeing the same thing over and over again. Okay. You just have to, when you're trading your patterns and you're trading, you have to put everything together. You want to have your sticky notes. You want to have, and it's why you do your homework, right? Because you want to know on these type of instances, and these, these last couple of days in the move in the market have been good examples as well, which is why I'm happy that, making this course right now during these times, because some really good moves have been happening. You just have to be, like I said, you have to do all your homework and make sure that you're on top of your game, because in these type of instances, we see that we get this very high rise going into this London session, right? We get the consolidation. Market manipulates to the downside. It doesn't clear out any lows. So this might have been a hard buy to get in, right? This might have been a hard buy for you to get in. And then you see that the market rises all the way up for London open, and it just pushes. But it doesn't come in and it doesn't clear out that high for London session. What does it do? It drops back down during London session and rises all the way back up to the upside. Now it clears out that high. And what do we get? That's the manipulation to the upside, clears out the high, and this is the distribution. That's 3 right there. That's the distribution. So you can see how they manipulated the buyers to get into the market and took it down very fast for over 100 pips to the downside and continuing to drop. So when you use this in correlation with your, and you use this in correlation with your DXY, with your other pairs, these are just, like I said, these are strong moves in the market that you notice that, okay, the DXY did the power of 3 to the downside and cleared out lows, and now we're pushing to the upside. So with GU, it's the same thing. It's pushing to the downside, cleared out highs, and now we're making our way, we're making a very strong push, a bearish run. Okay, so understanding your London patterns, studying these patterns over and over again, identifying them in the market and trusting your trades. Like I said, you're going to become a very confident trader, and that allows you to become a very profitable trader as well. So I hope you guys enjoyed this video. I hope that you're understanding the London patterns more. Biggest thing is getting on those live trainings and doing your homework yourself. Okay, nobody's there to trade for you. It's just you and your charts. Nobody there to judge. Enjoy it. Enjoy the process, trust the process, and fall in love with it. All right. So I appreciate you guys, and I'll see you guys on the next training.